Alright, it's finally dropping. 10% today. Finally in the red. After planting the seed more than a month ago, I think in mid-November, that's when I planted the seed, I got squeezed by like $20, but then it dropped right back down. We'll look at the performance for the past 6 months. This Xpeng I think is pure BS because Tesla was the legit play, NIO was the knockoff, and Xpeng is the knockoff of the knockoff. Therefore is bound to tank, in my opinion. That's why I made the bet. As we can see here, I think I was first shorted near this area when it went above 55. I got squeezed all the way up to 72, and then slowly but surely it came all the way back to 38. Now I'm going to settle some of my shorts and move them a little bit further out. Alright, here's my Xpeng play. January 2021, $45 puts. Today is tanked to $38. I think it's time to settle and move it across. I'm still bearish in the stock in the medium to long term, but in the short term, there may be a bounce back up. So I'm going to capitalize on some of the profits, but still have exposure on the short side for Xpeng. Let's see, right here I have 5 contracts. My cost basis here is 1.93k. Right now is worth 4.32k. More than doubled. So just looking at the position today, it's jumped 50+% because the stock itself tanked 10% down. To me, this is a good time to settle because my expiration date is not that far away, maybe just 2 weeks, like 10 trading days. So I need to capitalize on it. There are so many different strategies when you're up like this. When you're up more than double, you can always just sell half and then let the other half ride for the next 10 days and see where it goes, because it definitely can tank another 10% tomorrow, driving these premium prices much higher, maybe to the $13 range. If it hits the $13 range and my cost basis is at $387, therefore it's more than tripled. But I'm going to take this off the table today. So as you can see here, we have this option to roll the position. I'm going to try this out right now. We're going to roll it to mid-February, so we're going to stretch it out another month. Right now, the leg is at $45 put, and the credit is at $8.60. We're going to take about half off the table. We're going to buy these $35 contracts and roll it to February. Okay, so if I roll this right here, the spread is -5 to -4.6. I'm going to split it right down the middle at $4.80. Essentially, what this means is that I'm taking my original bet off the table and some profits because my original bet is $380. Now I'm getting $480 back. For each contract, I'm getting $100 back. So I'm putting $500 in my pockets right now by rolling this position, but still remaining bearish in the position. Okay, 5 contracts, credit, $480, let's try it out. There we go, order filled. If we go back here, we look at Xpeng. So right now these 5 contracts have been rolled to February 2021 $35 puts. My exposure is the same. I took my initial bet and some off the table. So this is the ultimate free bet. Because all this contract is free money. It's money I've won. I've won some money and I'm letting it ride. In Chinese, there's a term for this. It's called feng ji yu, which means you're flying a kite. This analogy is like letting it fly or letting it ride because you have no attachment to it anymore. You don't have any monetary attachment because these are your free winnings and you're just letting it fly. So right now, I don't have the pressure of time decay. If I didn't make the move and it bounced back up 5% tomorrow, that in itself and the time decay, both of them are eating into my profits. So right now I bought more time and I can lay back and see how everything plays out. Because as I said many times before, anything can happen in the very short term. But in the medium to long term, things may play out the way it should. There's always a different play that if I sold all these contracts, I can just wait. I can just wait until this stock kind of bounces back up and then short it again. Because that way, these February contracts would be much cheaper than today. When things drop 10%, these February contracts has risen a lot as well. Not as much as my January contracts, but relative to any normal day, it's much higher. So if you look at it that way, this is definitely a lot more expensive than it should be. But I rolled it to complete the action today, just because I have so many other plays to worry about. I'm not just trading Xpeng every single day. So therefore, I don't really care what happens in the short term. But over the next 2 months, if it drops more, then I'm still profitable. That's a balancing act because no one can really time the top or the bottom. Why not take some pressure off and take some winnings off the table? It's never wrong to take profits. I should really put that in a t-shirt. Fast forwarding to day 2, today Xpeng has gone back up 7%. I predicted maybe a 5% bounce, but right now is up 7. Let's take a look at the options contracts we sold and bought yesterday. Okay, first we look at the ones we sold. January 15, 2021, $45 puts. We sold 5 of them at a price of $8.54. And today these contracts has dropped 20+%, 20.58% right now. And let's take a look at the ones I bought. The ones I bought for February 19th, 2021, $35 puts. These ones I bought for $3.77, now is worth $3.05, a 15% drop. This really shows the concept of expiration dates. In this case, in January 15th, about 2 weeks away, this one has dropped 20.5%, but the other one has dropped 15%. So a 5% difference is not much. Looking back at the trade yesterday, I definitely capitalized at the top. If we look at the option contract in details right here, yesterday was definitely the peak. It hit a peak of 860, and luckily that's when I unloaded my contracts. But at the same time, I did buy the February contracts at the peak as well, at around 370. Right now it's only worth 280. But that's okay, hindsight is 2020. If I knew for certain that today's gonna bounce back, then I wouldn't buy these contracts yet. I will wait until this contract drops another maybe 20%, and then I'll get in. But that is market timing, and I don't want to watch this play day in and day out. This play is good for 2 months, so if it bounces for a couple days and it tanks back, I'm good. So I'm betting in the medium-ish term, like in the 1 month, 2 month time frame, that the stock will continue to drop. Even if it doesn't, I already took off my initial bet. So these are just the profits riding. For me, there's not much pressure. I can just grab some popcorn and watch the show. That kind of sums up my Xpeng shorts for the short while. I might make more plays if this stock jumps to like $50 levels and I'll short it again. But who knows? But right now the pressure is off and I'm just here to enjoy the show. But yeah, that was my play to pop the EV bubble. Drop a like and subscribe if you found any value in the video. Thanks again for watching. Take care and I'll see you in the next one.